everybody, and welcome to part 3 of our series on conventional mortgages. We have Alex here with us, who will talk to us about what offers look like with a conventional mortgage pre-approval. So being a buyer's agent, I know that I love to see a conventional mortgage pre-approval. It means that my buyer's highly qualified and that few things are going to go wrong in the process. And can you elaborate on why that would be compared to other loan programs?
Definitely. So exactly what you said. Conventional mortgages tend to be for people with higher credit scores, which means that there's going to be less going on that we might need to repair in the background through the mortgage process. With relatively flexible down payment percentages, it's also going to be pretty easy to come up with the total cash needed to close. Now, that stands out with a conventional mortgage because of the requirements around it. A minimum credit score of 620, 640, and really starting to become viable around 700 really makes a conventional mortgage tend to be for the best of the best. Now, another great thing about going in and going under contract with a conventional mortgage is the flexibility of the appraisal. Now, a lot of the other government loan programs, FHA, USDA, VA, tend to have very, very strict appraisal requirements. Conventional mortgages don't have that same strictness, so you're going to be able to see a little bit more flexibility with how the appraiser does the appraisal. So that's going to be another great reason why things are easier with a conventional mortgage pre-approval. Final thing I want to touch on is going to be seller help. Now, other loan programs, like I talked about earlier, are going to have up to 6% seller help available, but a conventional mortgage will keep that around 3%. So that's going to be a small detriment, but by and large, conventional mortgages are still going to be very flexible for a lot of buyers.
Now, as a seller's agent as well, I know that when I see a conventional pre-approval as part of the offer, I know that there's going to be some pros and cons there. Can you tell us what those would be?
So it's going to be a lot of what I touched on, from a buyer's agent standpoint. It's going to be, the buyer's definitely highly qualified. There's not a whole lot that's going to go wrong due to the appraisal or due to any credit repair that needs to be done. And, when you're a seller's agent looking at it, I think the biggest thing that stands out is going to be that the buyer can close quickly. Conventional mortgage pre-approval process is definitely shorter than something like USDA, which requires collateral underwriting, or VA that requires a very fancy kind of appraisal process. So that's one of the best things about a conventional mortgage pre-approval as a part of an offer. It really shows that you can close as soon as possible.
A little while ago, you mentioned seller credits. Can you elaborate on what those are and where it belongs in your offer?
So seller credit also goes by the name seller help, seller concessions, variety of different names. But by and large, what it means is when you're going to buy a house, there are going to be two things that you have to pay for before you can move into the home: the down payment and then all the closing costs associated. There's going to be things like the appraisal, title fees, taxes, all that fun stuff. Now, when you're going to buy a house, you can ask the seller of the home to contribute a dollar amount towards the closing costs on your behalf. Now, with the conventional mortgage, those are capped at 3% of the purchase price unless you put greater than 10% down, where it's capped at 6%. So with a conventional mortgage and seller credit is going to be very important if you don't have a lot of cash on hand but still want to be able to buy a home. And like I said earlier, that seller credit cap at 3% with less than 10% down is a little bit more restrictive than other loan programs. So that's a great thing to keep in mind.
So one of the largest things that can cause issues in a purchase transaction is the appraisal. Can you tell us what a conventional mortgage appraisal process looks like?
So with a conventional mortgage appraisal, like I said, they're not going to be, very government loan programs. So the appraisal is going to be a little bit more lenient on what it's going to be looking at. Some of the biggest differences between FHA and conventional are going to be things like environmental and zoning issues. If you're buying a house close to an airport, that could be a really red flag for an FHA mortgage. Another good thing is going to be removal of debris, which is something I see a lot on FHA appraisals that I never see on conventional appraisals, and it basically just means the floor needs to be swept. So that's going to be a really big difference. And like I said, FHA, USDA, VA, all going to be issues that come up, and they're very strict, while conventional is going to be a little bit looser on appraisal requirements.
Thank you so much for all of that information on conventional mortgages, and thank you for watching, and contact us if you have any questions.